Hi everyone, in this video I'm going to take a deep dive into Alphabet's most recent quarterly earnings call to try and figure out what's going on with Alphabet stock. So let's get right into it, starting with CEO Sundar Pichai saying it's clear that after a period of significant acceleration in digital spending during the pandemic, the macroeconomic climate has become more challenging. So Alphabet was a beneficiary during the pandemic as people were at home spending more time buying stuff online, and that is a strong tailwind for Alphabet's business. So revenue and profits surged for for Alphabet. But now that consumers are spending less time online, shopping more away from home, that's a headwind to Alphabet, and that's what the CEO is just opening with right off the bat here. He goes on, our revenues this quarter were impacted by pullbacks in advertising spending. And that's been true across the board. Advertisers have reduced spending. Uh, in addition to the macroeconomic headwinds, there's the war in Ukraine, and advertisers are a bit hesitant to go out in front of this time when there's fears of a recession, there's a war going on in Europe, inflation is pinching consumer budgets, so advertisers have turned more cautious, and that's hurting Alphabet as well. The CEO goes on to say, AI, artificial intelligence, is the most profound technology we are working on today. We've been a leader in developing AI. In fact, our Transformer research project and our field defining paper in 2017, as well as our path breaking work in diffusion models, are now the basis of many of the generative AI applications you're starting to see today. And Alphabet spent a pretty great deal of time in this conference call talking about its AI ambitions. This is no doubt in response to the popularity of OpenAI's ChatGPT. That's gaining in popularity, and some investors are asking, hey, Alphabet, you've been talking about AI for a long time now. Why are you behind in developing this product? And so, they talked a lot about AI in this conference call. They also, we'll see a little bit down the line why they're a little more hesitant before launching their own AI products into the market the way ChatGPT has. So we'll see more of that. Let's continue. In the coming weeks and months, we'll make these language models available, starting with Lambda, so that people can engage with them directly. So look out for this product launch from Alphabet over the next few weeks and months. So they're working to bring large language models to Gmail and Google Docs. So this could be a game changer, right? Imagine getting language models. Imagine getting your emails infused with these language models, and Microsoft is investing in OpenAI, and Microsoft also said that they're going to start to use the technology from ChatGPT to infuse it across several of its products. So Outlook could also receive the capabilities. But imagine being able to just write a prompt in your email, and it composes the whole email for you. That can save you a lot of time and hassle in terms of composing emails and as well as documents as well. So this could really be a game changer depending on who develops and capitalizes on this most effectively. So I'll end with this note here. The second thing the CEO wanted to discuss is their sharpened focus. They're committed to investing responsibly with great discipline and defining areas where we can operate most cost effectively. Of course, you've heard Alphabet announce major layoffs in recent times, announcing that they were laying off hundreds of employees. And what stood out in those announcements was that they were laying off these luxurious perks for employees as well, really trying to get some discipline with costs as investors started to question Alphabet's expense growth at a time when revenue growth is slowing down considerably. They wanted management to cut costs, and management has started to cut costs going forward. And then the next opportunity they have is they have the opportunity to monetize shorts, right? Consumers have shifted in how they consume their content. Instead of consuming videos on YouTube that are a few minutes long, they like the shorts, which are less than a minute usually. And this is gaining from the popularity of TikTok. So Alphabet capitalized on the popularity of TikTok, launched shorts, which is a competitor, and that's gaining in popularity significantly. Consumers are switching over to that more prominently, and as well as Facebook, right? Facebook and Instagram launched Reels, their own short form video format. They also said that it's gaining in popularity. So they're all capitalizing on this trend from the reduced attention span of consumers who want content really quickly. A few minutes was too much. They want less than a minute now. And so now YouTube has that opportunity to start monetizing that. For now, they've just been spreading it out, getting consumers to get used to consuming that content. They haven't really expanded on the monetization of that. So that's going to start happening. That's going to boost the top and bottom line going forward. All right, so that's all I've got for this video. Thanks for watching. I hope that shed some insight into what's going on with Alphabet stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.